it's really two stories. First of all, on the economic side, like you mentioned, now we're seeing macroeconomics slow down. So in terms of growth, for investors that want access to growth, during this time period when we're seeing growth finally kind of slow down, job numbers come down across the economy, they have to access growth via a secular story. And Nvidia just straight up is probably the best secular large cap story out there that we've really maybe even seen in our time. So that's why you're getting this flight of capital to it. The other interesting thing about Nvidia, really this whole run up, was its valuation. So when the stock was $700, $800, $900, what was happening was it would beat earnings on these reports and guide up, and the stock would go up in tandem with the estimate revisions higher, leaving it always around 20, 25 times forward earnings. Now, finally, after the stock split, you're looking at a stock more like 40 to 50 times earnings. So finally, that multiple also really tacked on top of it. And that's the market kind of saying, listen, we think this growth is actually going to last. We don't think that this is really a peak right now anytime soon. And like I mentioned, the macroeconomic situation is leading towards secular growth. So the two things together, and really just the scarcity value around an asset growing that fast at that size, have led to this dynamic, and it's really just been unbelievable to see.
Josh, we know at some point there's going to be a rival that will encroach upon Nvidia's space, the market not looking at that at this stage. So how sustainable is this rally? Because it is taking with it not just one stock, but it's taking the entire market with it now. So how concerned do we need to be about a top-heavy stock market?
No, absolutely. That's a good point. I mean, I think that there's definitely room for concern. So every one of these quarters that Nvidia is now going to report, especially given the fact that now the multiple has caught up with the growth, are now going to be kind of a make or break point for the stock. So if Nvidia were to, let's say, guide down or just guide in line with consensus, right, that would mean that there's not any more of these estimate revisions the stock has been riding on. Further upside would only have to come from multiple expansion. And with a multiple that looks like 40 or 45 times forward EPS at this point, there's not really very much room for multiple expansion left. So it sounds kind of crazy to say, but it's really true. A lot of the market is really just riding on the reaction to Nvidia's future earnings prints. And it's really for this reason that we at the fund prefer the breadth catch-up trade, which is going after names that we see undervalued in the small to mid-cap space so that they can catch up with these overall indexes. And we think that that's where alpha is, not necessarily in the top-heavy index itself, or things that are so levered to Nvidia per se that already has that valuation like we talked about.